Hello there. Good morning. Welcome to the Street's opening bell here from Post 35 on the floor of the New York Stock Exchange. Today is Friday, the 18th of November. I'm JD Durkin. Opening bell rung just moments ago here on the floor by Grindr as that company lists on the NYSE via a SPAC deal. You will see and hear the folks from Grindr behind me. They are very enthusiastic and large in numbers to be here to kick off this trading Friday. The major indexes are in the red as Wall Street looks to close out a week of bit of modest declines. It comes as investors react to the latest batch of corporate earnings and a bit of hawkish comments from the Federal Reserve, at least a few of their presidents and members yesterday. We had lots of them speaking. We'll break it down just a bit, signaling a longer series of rate hikes perhaps than previously expected. Also, do they keep the rates at that terminal rate for longer? No shortage of things to talk about. Let's take a look at what's on tap for this morning's show to talk about. We'll dig into recent comments from the Fed Reserve as investors bet on further rate hikes. Plus, we'll talk as Wall Street wraps up a busy week of retail. This was retail palooza. I used to say earnings palooza. It's more specifically retail earnings palooza this week, just in time ahead of the holiday season. And finally, this was a wild Thursday night on Twitter. RIP Twitter, I guess, maybe not. We'll break down what exactly is going on at the social media company as it faces a mass exodus, as Twitter 2.0 takes flight, or I should say is sputtering its little wings and trying to take flight. For more on those stories and so much more on this Friday, let's bring in Martin Baccardax. He's our senior editor and markets correspondent, the man who never sleeps and always has his finger on the pulse of what investors need to know. Stock futures were up. Give me a sense of what's top of mind today. Are there hopes for a bit of a Fed rethink, as I believe you phrased it in some of your writing this morning, Martin?
Well, I think it's more of an inflation rethink, to be honest, JD. I think the assumption now is that the hawkish comments that you alluded to, and I think quite correctly, are now making investors wonder whether or not they should believe in those softer inflation prints that we saw earlier this week and indeed last week at the factory gate level and at the consumer price level, because the Fed is essentially trying to lean against market expectations of a pivot or a change. Now, that hasn't really had much impact on what we expect from the December meeting, but it does suggest that we're going to have changes in where we are as far as the terminal rate goes and for how long we will remain there. I think markets today trading higher are simply just reflecting some of the selling that we've seen earlier this week and some positioning into the expiry of options, which represent about $2.1 trillion worth of underlying assets. It happens later this afternoon, and it's typically the sort of thing that engenders a bit of volatility. And then into next week, when, of course, we have the Thanksgiving Day holidays and the Friday liquidity lull. Essentially now is probably the best time to do some window dressing prior to the start of December, when, of course, we'll get the Fed in focus in clear sight as a result. So I wouldn't necessarily see much in today's movements, apart from the fact that markets remain very sensitive to Fed commentary and are tracking Treasury bond yields quite closely.
People are still trying to digest all of the Fed commentary that we heard from yesterday. What or who is being talked the most about? And I have a sneaking suspicion you will say St. Louis Fed President James Bullard.
Yes, it absolutely is. I mean, his comments, as well as some presentation materials in his talk in, I think it was Louisville, Kentucky, are really part of the discussion in Wall Street this week. And essentially what he said was that in certain scenarios, he could see the Fed funds rate, if not legitimately, at least from an academic point of view, rising to as high as 7%. Now, we are not going to 7%, and there's no circumstance in which that is going to materialize in the months ahead, barring some completely unforeseen circumstance, and even then, to be honest. But I think the fact that he is talking about that higher terminal rate has been enough for investors to at least reconsider what they were picking through in terms of the PPI and CPI data. Now, he does seem to be, however, at least modestly outside of mainstream Federal Reserve thinking. And that is not unusual for Mr. Bullard, because he tends to speak his mind and as a result can be seen as a bit of a wild card in broader Fed discussions. But I think just raising those concerns, and again, given the fact that we are seeing a pullback in economic expectations, we are seeing the Treasury bond curve indicate even deeper concerns for recession into the coming year, it was likely that investors were going to take Mr. Bullard's comments at more face value than they might necessarily.
Yeah, and those comments included the idea that the policy rate is not yet in the zone, in his words, that may be considered sufficiently restrictive. You made an interesting comment there about him that he tends to be a bit more outspoken. For people that don't closely follow this stuff, I wonder if there's anything you're able or willing to say a little bit maybe about the personalities or the tendencies that we often hear from other Fed speakers or representatives. We followed, Chairman Powell's comments pretty closely, but is there anyone else that's of note or may have anyone prone to like a slip of the tongue from time to time, I wonder?
I wouldn't say particularly JD, although Bullard is probably the name that people would associate with being outside of the consensus thinking of the Federal Reserve. And I think there's sometimes good reason for that. It's always necessary, and I think probably useful to have somebody thinking in a bit of a contrary fashion. We very often paint the sort of opinions of Federal Reserve officials in very binary tones. They are either hawkish or dovish. And I simply don't understand how that applies, because the data underneath and the economic activity which defines the data really forms the central plank of all of their opinions. And therefore, being hawkish or dovish, I think, is really more of a way that they are viewed from a market prism as opposed to how they interpret data themselves. Although that said, again, Bullard is someone who has in the past been comfortable speaking a little bit beyond the Fed consensus, and it was no surprise that he did so this week as well.
Does this at all increase the likelihood of another 75 basis point rate hike for December as opposed to what has seemed to be the popular idea of 50?
Yes, not so far, JD. There was a momentary change in expectations yesterday, but they seem to have settled back to where they were prior to Bullard's comments again this morning. So the anticipation is there's an 80% chance of a 50 basis point rate hike in December. There's a small 20% chance of a 75 basis point move. But I think in large part, Fed commentary, the data, and the expectations all suggest that the chances of that 75 are really quite small. The Fed is more comfortable with smaller rate hikes going forward and getting to their terminal rate potentially at a longer period of time and holding it for a longer period of time. So my suspicion, and I think the market indications bear it out, is that we've probably seen the last of the big jumbo 75 basis point rate hikes.
Yeah, anything else on Fed that I did not particularly tee you up on that you would want our viewers to keep in mind as the Friday session hits the 9-minute mark today?
Well, I think the recessionary risks are probably the most significant, JD. There was commentary out of Europe today from European Central Bank President Christine Lagarde. Essentially, what she said was that we're going to continue to raise rates to slow inflation, which is running at the fastest pace on record in that economic bloc. But it may not be enough. They may have to throttle down growth prospects at the same time. Now, there are various ways the ECB can do that, although they're all indirect. But it's interesting that she is as worried about growth prospects as she is, because what we are seeing in the United States is something similar. The yield on benchmark 2-year Treasury notes is now about 0.7% higher than the yield on 10-year notes. And essentially what that means, JD, is that investors are more worried about inflation in the short term and growth in the longer term. So they're selling short-term bonds and they're buying longer-term ones. Those are generally the kinds of activities that we see from traders into recessionary conditions in the US economy. It's not a perfect predictor in terms of its record of accuracy over the past 40 or 50 years, but it's probably the best one that we have. And the difference today, JD, is the steepest it's been since 1981. So even if the record isn't perfectly sort of applicable in this case, the fact that it is the steepest in about 40 years is enough to have people concerned about recession, and it may be coming sooner than we think.
Martin, we've also seen a little bit of a pullback in the greenback. What is the cause and what's the reaction given all of the commentary we had for quite some time about the strength of the US dollar and a lot of the negative impacts of it?
The best way to look at the dollar, I've always thought, JD, is a mechanic in which people will price interest rates. In other words, interest rates are essentially the price of money. And the dollar in the global economy is money, despite what the crypto people might want to tell you. So if the anticipation is we're going to have lower interest rates, the dollar is going to retreat as a result. Now, again, this isn't perfect and it isn't always the case, but what we are seeing is essentially being played out at the moment. when the Fed was in the midst of its 75 basis point rate increases, the biggest tightening policy really in several generations, we saw the US dollar hit, well, against the yen, the highest levels in about 35 years, and against a basket of its main currency peers, the highest level in about 25 years. When we started to drift away from those rate hikes, and now we see smaller ones going forward, the dollar retreated in kind. So really, in some respects, JD, I always find it illustrative to look at the dollar and interest rates together. The interest rates are the price of money, and the dollar, as it trades against its peers, is how the market sees money itself.
And of course, one of the big negative impacts of having such a strong US dollar is that essentially you're passing inflation on to other countries, right? You're forcing other countries and other currencies to largely keep up. I mean, listen, myself and a lot of people that may have recently traveled to parts of Europe, you may have noticed your dollar goes a bit further than maybe a comparable visit to the previous year. Do you think it's welcomed relief by many people that had been looking at a lot of the downside of having such a strong greenback?
Yes, no question. It certainly should be. I mean, one of the main implications that a softer US dollar has for a lot of emerging market countries, I beg your pardon, is that it lowers the price of energy costs. Essentially, energy costs, whether you're talking oil, natural gas, or even commodities or anything else, they're all priced in US dollars. So importing commodities and energy becomes more expensive when the dollar is on the rise, and it becomes a little bit cheaper when it's on the decline. And that, of course, is going to have significant impacts for inflationary pressures in those economies. But it's always worth remembering, I think, JD, that in emerging market economies in particular, and also China for that matter, food prices are a much more significant component of inflation calculations than energy is. Energy, obviously, in Europe, in the United Kingdom, and here in the West, is the most significant component of headline consumer price increases. It's not the case in emerging market economies. It's generally food. And therefore, food imports become less expensive when the dollar retreats. And that's probably the most significant change that a weaker dollar brings.
Oil prices also fell by over 3% on Thursday. Can you talk to us about some of the factors leading to that slump and a bit of context, if you could, about what this might mean for someone watching?
Well, I think you're right to point that out, JD, because ultimately when the dollar decreases, because oil is priced in US dollars, the price of oil tends to rise. They tend to move in an inverse relationship. It's not often that you see oil declining at the same time that the dollar is pulling back. So it tells you that it's something else. And that something else does appear to be demand in China. China is the world's biggest energy importer and, of course, the second largest economy in the world. They are now, of course, suffering under this zero COVID policy, which has been a miserable failure and is continuing to be so. At present, though, what we are seeing more troublingly, JD, is a significant increase in infections in China. The official number is a bit over 23,000. Small, of course, when you consider it's a 1.2 billion person country, but nonetheless, it's moving in the wrong direction. It's the highest level since it's been in April, and cities around the country are now erecting makeshift hospitals and putting in all sorts of other policies to restrict movement and activity. If that were to persist until the end of the year, you can imagine growth will slow down and energy demand will slow with it. That, more than anything else, JD, is what's driving oil prices down in overnight trading.
Something else that I saw that you wrote about early this morning over on TheStreet.com, Martin, was a little bit about markets in Asia, how they performed overnight, and you just started to allude to it there, and I wanted to pick your brain a bit more. The latest on China's COVID infection numbers, and it sounds as if you are greeting that with a bit of skepticism, and I wonder if that's through the lens of public health, if that's through the lens of business and multinational corporations doing business there, or a bit of both.
Yeah. It's more of a political thing really than anything else, JD, because it is the central, apart from what the government is doing from an economic perspective, health policy is the central plank of Xi Jinping's new leadership. And of course, he's now entering just the beginning months of an unprecedented third term as president of the Chinese Communist Party and as a result, the leader of the country itself. Zero COVID is his. He has owned it and he has doubled down on it, despite the fact that epidemiologists and virtually everyone else in healthcare around the world are saying it's not the right way to go and that they should focus on vaccinations rather than this restrictive movement and the hopes of getting down to an absolutely flat level of infections, which is simply quite impossible. So, yes, we saw that capping gains in the Asia region. obviously they were able to eke out at least some sort of green today as a result of the weakening US dollar. And really the other thing I think that was interesting, JD, which you don't hear much about at all, is the fact that inflation now in Japan, I can't believe I'm actually saying these words because they've been trying to stoke inflation for the last 20 years. Inflation in Japan reached 3.6% last month. That's the highest in 40 years. And that's a country that has suffered deflation for many, many generations as a result of the demographic imbalance and many other things. But again, because Japan is reliant on energy imports, they have had the weaker yen, and that has made those more expensive, and that as a result of spiked inflation. So I was struck by that figure as well as what I'm seeing in COVID infections in China.
I do want to get your perspective on Twitter, but as I've now grown fond of doing, wanted to see if there was anything else you think is important with regards to things weighing on equities. Because Martin, I do my best, and Ross and Rebecca here as well. We try and come up with as many questions as possible that we know you are going to deliver high value on. But anything else on equities? Otherwise, I'm very excited to talk to you about Twitter.
I think it's worth just mentioning one more time, JD, that we have those options expiring later today. It's worth about 2.1 trillion when you look at the assets underlying it. So if there is volatility in the final hours, it might not necessarily be linked to headline movements or anything else like that, but it is a little bit of an arithmetic change in stock prices as a result of many of these options expiring, many of which, JD, were only purchased last week after that softer inflation print. So that's going to get shaken out over the final hours of trading today, and we'll have a better understanding of where we're headed when we get into Monday morning.
Your expectation is that might have an impact in the afternoon hours, right?
Yes, indeed.
All right, absolutely. So a lot to unpack here, but let's do our best and dig into the mess of Twitter. First of all, were you on Twitter last night? Did you
I
see
was.
I mean, my God, it's like I had tweeted, there's various fire memes over the year. My favorite is Troy Barnes from Community. Donald Glover, and he shows up with the pizza and like everything is on fire. I mean, that's really the description of Twitter last night. A mass exodus at the social media giant as Mr. Musk continues to double down on his bit of a cultural reset. What is the latest here? Why was everyone tweeting RIP Twitter?
Well, the meme that I enjoyed the most, JD, were all the Titanic ones, because the assumption was that we were sailing into an iceberg of Mr. Musk's own creation. And as a result, we were all going to sink to the bottom of the sea and away from our favorite website. It's so hard to put your arms around how ridiculous this story has become in a month where we've seen absurdity after absurdity. Twitter really does stand out. But essentially, if we go through the timeline, it's this. Earlier this week, Elon Musk had grown frustrated about the pace of activity that he is seeing within the group and demanded a hardcore commitment from employees, and particularly the software engineers. He issued a company-wide email. He said that anybody that wasn't ready to commit to that sort of level of intensity could resign. And if they didn't click that particular email, he would consider them as having been let go. Well, by Thursday night, far fewer people clicked that email than he had hoped, and there was a mass exodus as a result. He began to get very concerned that that quick exodus would not only put the company at risk, but that because he didn't know who had agreed and who had not, he was worried about the security of the system itself. So he locked the doors. Essentially, Twitter's headquarters aren't going to be open until Monday morning, until he can sort through this mess. Reports say that he's reaching out to some engineers who decided to leave to try to entice them back. You'll remember he did the same thing last month after he reduced headcount after purchasing the group. And he's also U-turned on blue badges and verification and goodness knows what else. So he's finding it much more difficult to run this company than he had anticipated. If I were to venture a guess, JD, and it's only a guess, I would say that Mr. Musk is so accustomed to developing companies with a startup mentality that he demands this sort of commitment from his employees as a result. It's much easier to do that when you're in the beginning months of an organization, or if you are someone who has been with that organization from its inception. It's far more difficult to demand that of people who've been working for a company for a number of years and have a method and an efficiency that they have developed during that time. You cannot then come in at the 11th hour and demand for them to be working 80 hours a week and sleeping on the floor and all those other things that we associate with startups when you've been there for 10 years already. And he is just not seeing the difference in that kind of corporate culture. And of course, he's not engendered himself any trust from employees as a result of his comments before purchasing it and his headcount reductions after purchasing it. So this is a mess of trouble, and it's only going to further add to the distractions that many Tesla investors have been talking about for a number of months.
I mean, it is an incredible takeover in terms of the amount of money, but you bring up a really good point here. Has there ever been a moment in his career when he has had to take over an entity? I'm not saying start it, I'm not saying like create SpaceX and launch and blow up a bunch of rockets to try and figure it out from the ground up, like you said, from the beginning point. Has he ever had to do this before? Not that I can think
not
of.
To my knowledge.
But you might know better than I do.
Not to my knowledge, JD. This is a mature company, and you were looking at people at the software development phase, at the marketing phase, and at the content moderation phase, who have been doing what they have been doing and successfully. I mean, we all love this platform. We all see its power. We all see its potential, and he is demanding significant change. Almost, JD, at exactly the wrong time, and that does speak to a lack of instinct as well. The World Cup begins this weekend and is going to last for 3 weeks. There is going to be an enormous amount of user traffic generated by that. There was, of course, the elections. There's the special runoff in December, and really we're getting into the teeth of the American sporting season as well. And then we'll get in, of course, to the holiday movie season and beyond. There's all sorts of reasons why traffic should increase, engagement should increase, and he could obviously engender a little bit of advertising spend growth as a result of that. But to demand sort of life-changing alterations in workflow 24 hours before the biggest global sporting event in history is simply beyond my comprehension.
Yeah, I mean, plus Martin and JD do the market open for TheStreet.com every weekday morning after the open, and these clips are on Twitter. So when you talk about the most watched events in the world, the things that millions of people around the planet tune into, you're right. It's election, it's World Cup, it's elections, and then Martin and JD. I'm willing to give the midterm elections just a slight edge over our show here. So hello, by the way.
Momentary edge.
Yeah, it's just listen, but we're growing. Those other entities, democracy and soccer, have a little bit more of a head start than we do here on the show. So hello to the millions watching. Hello on Twitter, if there is a Twitter at this point, because by the time we started the show till now, I haven't checked. Twitter could be fully shut down. But that does actually jokingly bring us to a legitimate question. Is there an actual concern? I mean, locking the doors to the office. Is there a concern that at some point here they're just like, sorry, folks, Twitter literally has to shut down for 48 hours or 24? Like, is that a possibility?
I think a temporary shutdown, I'm not predicting it in any way, but I wouldn't rule it out completely. Now, would Twitter actually disappear as an entity under Musk's leadership? Probably not. I mean, he's on the hook for several billions in terms of loans to bankers. He has, of course, private equity investors and his own capital committed as well. He is the richest man in the world, but even the richest man in the world isn't going to incinerate $44 billion just out of result of petulance. At least I don't think.
Of course, Twitter has also alerted employees that the company's office doors, like you said, will be closed. What is your sense on what happens this weekend? I mean, and based off of last night, I mean, specifically that reaction that we saw from users there.
I think a lot will depend on what kind of sort of tone Mr. Musk adopts heading into the weekend and how he speaks to employees who have either decided to leave or have reluctantly remained in place and are considering their position going forward. I think, again, just the timing is so catastrophically bad ahead of the World Cup that he is going to have to rethink this. And to be charitable, and I'm more than willing to do this for Mr. Musk because he's had such great success in other companies, he may just be ahead of his skis in terms of what he wants from his employees, and he may be using colorful language that he hopes is sort of motivational rather than threatening. Whereas employees see him as maybe a cartoon character right now and not necessarily somebody who's had this kind of success. Now, it's his responsibility to bridge that gap in perception. There's no question about it. But if we are to give him the benefit of the doubt, we might say that this language is more aligned with his attempt to motivate and drive growth rather than to kick people out the door and do things his own way. I certainly hope that that's the case. And if so, he can moderate his language and bring and bring engineers and other employees back into the fold.
Yeah, there was also challenges with people who had two-factor authentication signing out, not being able to sign back in. Okay, actually, I do have one more question on this before we move on. What is the latest with the whole Twitter Blue subscription thing? Because that was everywhere, and suddenly I feel like it's gone nowhere. Is it out the window?
I do not know what the latest is. There have been so many U-turns that it just doesn't simply seem to be, there's no plausible direction as to where this headed. He's talking about bringing it back and how some of the legacy Blue badges will disappear over time. But Mr. Musk was reasonably vague about exactly how that would happen and whether or not he would try to monetize it. So I do think, I feel conflicted about this, JD, to some degree, because ultimately I think Twitter's best opportunity is to try and get some sort of subscription revenue and really to engender a bit of trust on the platform by demanding some kind of authentication for those that want to use the platform. There's simply too many bots. There's simply too many anonymous people. And quite frankly, JD, there's simply too many people who say the most vicious, horrific, racist, sexist, and horrible things on a day-to-day basis without any kind of repercussion. And maybe badges and maybe authentication would eradicate a great portion of that, because we would moderate our language much more significantly if we had to be truthful about who we were on the platform. Now, of course, that's going to erode participation for some, but ultimately, at the end of the day, it might be a better community as a result. So I'll watch that with interest, and I'm a little bit more on his side when it comes to verification than maybe some other media commentary.
I like that. Okay, I appreciate that. Clearly, Martin and I can talk about this for a very long time, but I do want to move on here to retail sales. Ton of companies, Target, Walmart, Kohl's, all got quarterly results.
Yeah.
Bit of a mixed bag, maybe, with those names. What is kind of top of mind for you as we more or less finish this huge retail week that was?
Yeah, I love the rhythms of the market, JD, because this week always tends to be focused on earnings. And when I see the Foot Locker numbers on Friday morning, it tells me that it's all done. And that sort of consistency quarter by quarter is something that gives me great comfort. But of the names that you provided there, it's Target that stands out because it was the weakest when virtually everyone else beat expectations and was relatively, if not optimistic, at least neutral into their holiday expectations. Target, of course, missed on the top line, missed on the bottom line, and reduced their profit forecasts as a result. So it seems increasingly clear that Target's difficulties are more about execution than about broader consumer strength. And that's really worrying for shareholders, and of course raises questions about the leadership of CEO Brian Cornell. But this morning we saw Foot Locker beat. They also lifted their near-term forecast for Christmas sales. They have a new CEO who's just doing a superb early job. Mary Dillon is her name. She was with Ulta Beauty prior to joining Foot Locker. And she's also spent a lot of time as chief marketing officer at McDonald's as well. So she's an immensely talented executive. She joined the company only in September and has made significant changes as a result. Foot Locker is quite tied to Nike in terms of its sales growth because so many of its products are on the shelf. And she would like to wean Foot Locker away from that reliance. And the early numbers do seem to suggest that she's had quite a significant impact. We had Ross Stores numbers last night. That was a beat and raise. Ross Stores is an interesting one because they don't necessarily do promotions, but they have off-price branding pretty much all the time, and that's driving consumers who are looking for value. And then we had Gap last night as well, which also had a surprise third quarter profit.
Yep, Martin, we lost you for 1 second. We're going to work to re-get Martin back. Martin, you got my audio? Or do I have your
I do
audio,
indeed.
rather? Yeah. We got you back. We just lost that last little sentence, if you can continue.
Oh, yes. The Gap, relatively neutral outlook on holiday sales. They'll probably drift a little bit from last year, but it's a turnaround story that does seem to be gaining some traction. They have an interim CEO there. They're looking for a permanent one, and they're seeing an interesting shift in consumer spending that's been going on for a few months now, but extended into November, where people are looking for more formal attire as they spend more time sort of outdoors and at events compared to the kind of spending they used to do during the pandemic period when, as the interim CEO described it, it was cozy at home leisure. And now it's a bit more formal. And as a result, people are kind of just shifting up the price point, and Gap is capitalizing on that.
I have not known you very long, but before we move on to rapid fire, are you someone who finds yourself more drawn to the comfy leisure at home wear? Or are you like, hey, if I have the opportunity to throw on a suit and a tie, I'm going big?
No, I'm a homebody, JD. I went through a very long period in my career on Wall Street and in London and elsewhere where I spent far too much on haberdashery. And I would like to have a lot of it back because I don't think any of it is left in my closet. But the amount of money that I used to throw away on suits would make you weep. When I was a bond trader on the floor, in fact, tailors would come into the office. They would set up camp at the back of the trading floor, and we would walk down there, get measured, pick out colors, come back 3 or 4 weeks later to a handmade suit. That was the kind of money that I was ripping away and tearing up into small pieces simply to buy the latest in costume. I'm kind of happy that we don't live in that world anymore, and I'm much more comfortable just in a simple collar, and that's about it.
You know, it's amazing because I watch a lot of highlights from old sports games. I'm talking baseball games from like the Lou Gehrig era, and I love those clips because every single fan is there in the stands. Martin, you see the way they used to dress for sports games and matches. It is, I mean, it's truly out of this world. We're never going back to that. And so that's an interesting comment about, especially post-COVID. Everyone's like, I'm ready for sweatpants.
Exactly.
By the way, 10 points for use of the word haberdashery in that last response. I was hoping that would be a word used.
Down in the corner of the screen.
Yes, we should be. We're gonna do a point score for Martin based on words.
Exactly.
What's the other one?
Like
Not
around
warm
the horn.
beer. What's the warm beer phrase? Remind me. That's my favorite.
Small beer. No small beer.
Small beer. Small beer. Small beer.
Now,
And haberdasher.
If you don't take the segue, JD, I'm going to be disappointed.
Fair enough. All right, time now for the rapid fire with our remaining moments and minutes in this morning's broadcast. First up, speaking of no small beer, this bud is not for you. Why did Qatar reverse its World Cup alcohol policy at the 11th hour?
2 days before the kickoff, JD, is quite amazing, isn't it? I mean, this was Budweiser and a $75 million exclusive rights deal to sell beer at the World Cup in Qatar, a country which has a strict prohibition on the public sale of alcohol. It's not completely dry. It's not like Saudi Arabia. There is the potential to buy alcohol in hotels and, quiet consumption at home. But public consumption is simply just not part of the game. And Qatar had sort of acquiesced to that in negotiations with FIFA and indeed with Budweiser, which is owned by AB InBev, which is a company based in Belgium. But they seem to have had this about face as of today. There's going to be no sale of beer outside stadia over the 3 weeks of the World Cup itself. There will be some very restricted sales at the fan zone in Doha. Of course, people will be able to buy alcohol in hotels as well, but they won't be able to drink outside the match. They won't be able to drink after the match. And this is really a significant change, not only in policy, JD, but it does remind a lot of people about the controversy based on the selection of Qatar as the World Cup host about 7 or 8 years ago, I think it was. There's questions about human rights, there's questions about freedom and all the rest of it, and quite rightly so. There's questions about the money and the activities that were induced to get the stadium built in the first place. And it's just interesting that Qatar would decide to have this kind of PR disaster so quickly before the kickoff, because it just reminds people of the controversies in the first place.
Yeah, the only match, match I've ever been to in my life that didn't serve alcohol was the Portuguese Liga match I just went to like 2 weeks ago, 3 weeks ago, where I found out none of the teams in Portugal, Porto, Benfica, Sporting, doesn't matter where you are, you're not getting booze inside the stadium. That is a nationwide law. So that's an interesting thing there that we'll continue to watch unfold, especially with a beer sponsor like Bud Light. I mean, my goodness, oops, like the major last-minute oops 2 days before kickoff. Okay, next up, should SBF be paying attention to sentencing in the Theranos trial? We got that today. What do you think?
Absolutely. I certainly think so. I mean, I don't want to get ahead of myself. He hasn't been indicted as yet and certainly hasn't been put on trial, but there are enough allegations that he should be watching today's events with interest. Theranos, of course, is the company that was founded and run by Elizabeth Holmes. It claimed to have had technology that was going to change blood testing and the healthcare system forever by doing sort of microscopic and multiple disease tests with a single prick. Of course, all of that turned out to be false. She was eventually convicted on investor and fraud charges. She was acquitted of several others. It's probably worth remembering. But she does face sentencing today. Prosecutors are asking for up to 15 years in prison as a result of the fraudulent activities and the billions that were lost in the company failure. She is pushing for a much more reduced sentence of 18 months of at-home restrictions. Regardless of what happens today, JD, she will be able to appeal the sentencing to the 9th District Circuit Court in California. But again, we are looking at, a criminal end to a company failure. And there is every chance that this is what we could see when we pick through the debris of FTX over the coming years.
And finally, case closed. Why did UC Berkeley withdraw itself from the U.S. News and World Report's law school rankings? Interesting.
This one's interesting, JD, to me, because what we are seeing now is a big change across the board in sort of the commerce of U.S. universities. Berkeley, Harvard, Yale, and Berkeley have all dropped out of the rankings process that is run by U.S. News and World Report, at least for their law schools. They essentially say that they want to have a more holistic approach to not only attracting students, but to selecting them as well, and rankings just simply don't dovetail into that mission. You remember earlier this fall, there was also a controversy with respect to Columbia University, which was accused of using sort of misleading data in order to lift itself in the U.S. News and World Report rankings for undergraduate studies as well. So what we are seeing is challenges not only to that orthodoxy with respect to rankings, JD, but also the way that the standardized testing is unraveling. So many more universities around the country are becoming test optional. The SAT, which is a part, I'm sure, of your upbringing and everyone else's in America, is fading away in terms of importance. The admissions scandal is changing the way that colleges look at potential applicants. And ultimately, these are welcome, I think, sort of divergences to the orthodoxy of selecting students at university. And the only thing left to talk about, JD, is the price. Maybe we'll get there ultimately, but the money that costs American parents to send their children to top-level universities for that 4 years is enormous, is the best descriptive I can apply. And these small changes in the way that tradition had typically been executed is welcome, I think.
Absolutely. Okay, the great Martin Baccardax, a wonderful show today to end this week on a Friday. I hope you enjoy the rest of your Friday. We'll be closely paying attention to all the things you put on our radar. Martin, thank you. Have a fantastic weekend, my friend.
Thank you, JD. You as well.
All right, buddy, enjoy the kickoff of the World Cup. That is going to do it for the market open here from the floor of the New York Stock Exchange. Stick with TheStreet.com for more on these and all of the major market stories that matter to you, and we will see you Monday. Enjoy your weekend of soccer.